Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
Hey everybody, welcome back to the Investing Podcast. We're talking about Facebook today real quick. Check us out on Facebook, facebook.com/TuskMediaLLC. We're also on the tweets at the same place, twitter.com/TuskMediaLLC. And if you're watching this video on YouTube, do us a favor, hit subscribe, check out our previous content, all that good stuff. We are on youtube.com/TuskMediaLLC. We do have a new show that we're trying out, so check out our channel. We've got a new show called Young Bucks. Ben and myself are both pretty intimately involved in that, so we're having fun. It's kind of in beta testing, trying it out. Let us know what you think. As I mentioned, Ben and I here with me today, we are discussing Facebook and recent earnings, kind of the general outlook. So first things first, Ben, what were the major headlines, the things people need to know about the last quarter for Facebook?
I mean, just again, shocking beat again with $9.32 billion of revenue in the quarter. Street was looking for $9.2 billion. Daily active users came right in line. Earnings per share though, $1.32. The estimate was $1.13. Interesting story on the EPS side. Bloomberg actually came out with a wrong headline initially on the estimate. They said the estimate was 136. So it looked like a miss, but it's actually a 29-cent beat. So really good quarter for Facebook. And it just shows that the platform just continues to be just that, a platform that continues to drive revenue and works effectively for monetization.
Yeah, drilling down in that monetization, a number of metrics, and we've talked about these before, the things that we kind of look at are the price per ad and the ad impressions. What were your general impressions on those metrics, and what really stood out to really drive, as you mentioned, a huge beat and just a great quarter from Facebook once again?
Yeah, so you hear a lot of people talk about like three-legged stool. We know some characters who do that. But for Facebook, that really works well when you think about how do you figure out the revenue. So revenue determined obviously by how many people are using the platform, or how many ads are served. And then, so the ad impressions and then the price per ad. So how many users and how are you monetizing those users? Monetization being a function of price and impressions. And for a while, really since the middle of last year, Facebook has been warning that get into the second half of 2017 and we're going to start to see some of that ad impression growth slow. So instead of Duke growing at 50% on a year-over-year basis in terms of the ads that you're seeing in your newsfeed, you're going to be seeing that go down 40%, 30%, or even below that.
Which is still phenomenal growth.
But it's still very good growth, and it shows that they can still continue to put new ads into your newsfeed. But how is that going to actually work out and continue to generate revenue growth? And they said, there's some other levers we can play, but they were coy about it. And what happened was they just delivered on the price per ad. Price per ad up 24%. Now contrast this to Google, who's seeing cost per click, which is a similar metric, go down by about 20% year over year. So Facebook price per ad up 24% year over year, which is an acceleration from the 14% posted in Q1 and from 3% posted in Q4. And that's really making up the difference from going from 49% ad impression growth in Q4 to 32% in Q1. Now that's just 19% in Q2. So that's gone in line with expectations, and they have been able to make up for it on the price side. And I was very impressed with that. I had my doubts as to whether they'd be able to do that. But they're able to extract a lot of money from those advertisers who just seem immune to pricing right now.
And that's one of the things we've talked about really dating back to last summer. I can remember us in the old studio talking about Google versus Facebook, who has more leverage to pull in terms of kind of impacting pricing and being able to therefore drive revenue. And that's kind of been a highly debated point. Obviously, if you're bullish on Facebook, you believe that they have the leverage to pull, and that's kind of the central thesis, because they've basically become an advertising platform. And what's interesting to watch kind of play out is as we've gotten some economic expansion, some economic strength on a broad level, not talking about Facebook, talking about the economy, and start to see people kind of loosen up a little bit with the wallet, spending some money what's been unreal is how Facebook's really been able to rise to that challenge and, for lack of a better term, be kind of aggressive at pricing. They have kind of established themselves as price makers, and that's really been to their benefit.
Well, when you think about small and medium-sized businesses, what if you're a mom and pop shop? Think about your parents if you're watching this video. What would they think? If I want to put an online ad, would they go to Google? Google's service is a little clunky. They use Facebook all the time. They probably use Google all the time, but they use Google services all the time. But they use Facebook services all the time. Ads are right there. Create an ad, you're good to go. And especially with that small and medium-sized business, the discernment there might be a little less than the big corporates with all the marketing teams behind them and stuff. So I think Facebook is really leveraging that and cranking it up on the cost side.
Mm-hmm. So as we look at monetization moving forward, obviously you have the key metrics, but you also have multiple platforms, things like Instagram, the messaging service, WhatsApp, which I feel like once a year I need a refresher on what WhatsApp actually is, just because I'm not a user. Not many people here are, but as you look at kind of that, as kind of phase one is, hey, let's just really optimize Facebook itself, the traditional Facebook platform. What are you seeing kind of in terms of opportunities? Because I feel like that's one of the big things, and certainly Instagram, I think in a lot of ways is most compelling because you kind of have Instagram viewed as almost the Snapchat killer. Like it's going after a large, highly talked about, publicly traded company in and of itself, and it's just a smaller component of Facebook.
Yeah, I very much agree. I think Instagram is the furthest along in terms of monetization. I think that would be the simplest to monetize from a Facebook perspective because they already have familiarity of how to feed an ad into a news feed. Mm-hmm. So I think that's pretty self-explanatory there. Just anecdotally, from people we've talked to, Instagram ads so far are fairly effective.
Really good. I rarely see an Instagram ad for something that I'm not at least somewhat interested in.
Right. The messaging on the WhatsApp, I think, will take a little longer. Even Mark Zuckerberg and Sheryl Sandberg were talking about this. They want to just continue to build the user base, build more organic connection between business and consumers, and go from there. Messaging, I think it'll be interesting to see how that plays out. As far as WhatsApp goes, I think one of the biggest things that we learned from Snapchat's quarter was that it is extraordinarily difficult to scale internationally. And WhatsApp has that scale internationally because, of course, WhatsApp you can message between different countries fairly effectively, and it's very widely used. So Facebook now already has that scale there. They obviously have the scale of the Facebook platform itself, but also with WhatsApp as well. So
to not have to spend the money to grow potentially a lower return on investment market is kind of a bird in the hand, so to speak.
Yeah. So, and I think as we get smarter with message bots, and I think that's where the monetization will ultimately come, and we'll just have to see how Facebook works that in. But I think, it's hard to bet against them when they continue to post results like they did this quarter. And I have to admit, I've not been bullish, and frankly, I've been more bearish than bullish. And I did not see this price per ad coming. I did not see the Facebook team able to execute so effectively. They've grown to 20,000 employees. This is not just a startup anymore. This is a legitimate company, and they're just continuing to execute.
Yeah, and I think you see that execution kind of in how they have been somewhat visionary. You mentioned the messaging platform and how they're trying to connect businesses with consumers. And I've had a number of things recently. I don't know if you've had this, where I've ordered something, and to order I've had to log in through Facebook rather than log in through Google or through PayPal, and I've gotten the shipping updates through Facebook Messenger, that's not an option I've chosen. That's the only option I've had. And so that's, I think, kind of a logical progression. There's tons of platforms where, to comment on this article, you have to log in through Facebook or log in through Google or something. So they're already kind of being strategic and picking partners where they can say, hey, these are, and all of those products are are probably things, geared a little bit more towards our generation. None of them are, it's not like I'm ordering dog food or something like that and getting, very generic messaging, but it's, products like that, and they're really effectively making you use Messenger, which otherwise I frankly would not be using. So I think even in that, you see a little bit of kind of that continued push towards just being aggressive in using the technologies they have and really leveraging those resources. And so it's hard not to be optimistic given the track record we've seen from management and their insistence on kind of pushing that boundary.
Yep.
So definitely a company to continue to watch. Ben, you got any closing thoughts?
87% of revenue now comes from mobile devices. Interesting stat, and really impressive stat when you consider Google's issues moving to mobile and the early Facebook issues moving to mobile, and how is video going to play on it. So again, just hard to say enough about what Facebook did right this quarter, and again, difficult to bet against them.
Yeah, absolutely. Thanks for being here. Check us out on YouTube, Twitter, Facebook, all that good stuff. Leave a comment if you're on Seeking Alpha. We'll try to respond politely. Y'all have a great day.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.